All right, everyone, welcome back to another episode of Carnivore Trades. Today is Tuesday, August 9th, 2022. So, markets really kind of just drifting sideways to lower here today. You can see the spiders down 0.37%. Q's down a little bit more, down 1.13. Tesla, a little bit of a culprit there for that. Everybody saw the video of them hitting that child dummy. So that putting a little pressure on the NASDAQ, but overall, extremely light volume here. Let's take a look at the spiders. Markets have just closed. 41 million shares here traded. Let's take a look at last week. So, and this is including after hours last week. So we'll beat that after hours from this little candle here. So we'll beat that after hours. But I think probably outside of that August 4th date, that would be the lightest volume day of the whole year. So that's what we've come to expect here. It's summer doldrums, August doldrums. It's that type of a market. In addition, the volume is much lighter because, everybody's already placed their bets, right? So where everybody's waiting on CPI tomorrow, that is going to be a market mover, obviously. And, the consensus is that it's going to come in lower. And, you look at the price. So the last CPI number, it didn't take into effect crude. That came out in, I think it was, right around this sometime right around here in July. It was about a month ago, obviously. And it didn't really reflect the recent drop in crude or, soybeans or, corn, all these other commodities, silver, copper. That's a big one. I mean, copper, when the last CPI came out, the month of June ended, right here, and we still dropped quite a bit there. So, and a lot of things too is a lot of these prices have to filter out. So it takes a couple weeks for the prices to have an impact on the economy. But in any case, the number is expected to come in lower. As far as my kind of prediction, if you asked me a week ago or a little more than a week ago, I would say definitely coming in lower. I'm a little bit more on the kind of neutral side. Like I still think it's going to come in lower, but there's an outside chance it doesn't. And I'm just going to say this because of what the 10-year yield did earlier, well, really last week. On Friday, when we negated that head and shoulders, we got that bid there. And same thing with the 30-year. Yields are flashing some inflationary signs here, and there's problems in the market and in the economy. That said, I still think it should come in lower. I mean, like gas prices have come down, not where I live, but they've come down here, pretty sharply off the highs. Again, like this hardly reflects the pump. Every time I go to fill up, it's more than I've ever paid, every single time. But they've come down, I guess. So gas prices have come in, food prices have come down a little bit. Prices of we talked about base metals and stuff like that. So does make sense that it would come in lower. The question is how much of that is priced in. Obviously the market started a bit up last month after the CPI, and a lot of that's been priced in, and the Fed kind of pivoting has been priced in as well. So it could be a sell the news move. We could gap up on it. I honestly don't know. I honestly couldn't tell you. What I can tell you is, first of all I care about is the market's reaction. I don't care about the actual number. But what I can tell you is that the upside right now that I see on the spiders here is about 420. There's too much supply up here, and we haven't really consolidated enough. And if you take a look at this pattern here, it's not a sideways pattern, right? It's like upsloping. And if you take a look at the RSI, you can even see it on here. But you can see it's, we're diverging here. So we made a high right there, high, and then you're kind of like losing momentum. So you're making kind of divergent highs. It's not a sideways consolidation pattern. It's not really, if we were sideways here, then I would say this is a little bit stronger. We could possibly move up higher, but we still have, you've consolidated enough to get through this maybe, and if you want to even call this consolidation. But then you have all this here, and there's a ton of bulls trapped from that FOMC move. So that was this day here, and take a look at the volume there. There's a lot of trading going on there, and then you look at the volume here. Okay, so it's going to take a lot of power to get through that, and I don't think we have that right now. So I wouldn't rule out an up move here tomorrow, but I don't think the upside is, I think the upside's limited essentially. So that's what I do know about the CPI, and that's really all we can do here. Now, on the downside, you don't want to see a close below that green bar low on the spiders. then that's going to take you right back to probably 400, maybe 395 here in the near term. But those are the levels right now. Triple Qs here went right up into that trend line. I love this trend line, by the way. Nice symmetry too. It's not far. It's not like cockeyed, like there's a hit here and then a hit down here. It's pretty close. It's very close to equidistant with these hits, and then it kind of coincides with this gap window right there. Again, could it trade back up here? But again, yes, but I don't see. I mean, red bar, FOMC here. There's a lot of bulls trapped. We're overbought going into this. I just don't see a lot of upside here, and that's why I think the risk favors the downside at the current time. And we do have the summer doldrums, and so that's kind of your other bull thing, is that if the volume remains light, the market can float around and it can hold up. But the thing about the doldrums is they end when you least expect it. And we do have OPEX coming next week, so that could throw a wrench into things. That could be a reason for some volatility to come back. But we'll see what we get here. Overall, those are kind of the levels. Triple Qs, I would say right around that, I would say 311.75. If you close below that, especially on a weekly basis, that would definitely open the door for more downside. But for right now, it did hold this green bar low, the breakout bar low by the close today. So again, we'll see what happens with the CPI tomorrow. IWM, I do like this one as a short. I actually am short this via TWM. And you have a nice little evening star play. So, big move up, kind of gets exhausted, power bar, gap up, shooting star candle, and then a gap down and kind of a flush there on the Russell. It did have a little bit of a bit here in the last 10 minutes there, just some short covering and whatnot. But nice little setup there. I do think the Russell probably wants to go back and test that 183 area. You'll get a little bit of support at the 20 moving average, which might coincide with 184. But, in this zone here, that looks like that is where it wants to go in the near term. All right, so semis. A little bit of a sell to news on the chip bill here. Nancy Pelosi killed it again, selling NVIDIA. I can't wait to take her trading course later this year once it's out. So that's going to be exciting as well. But semiconductors here, next major level. So we got to that 20. We held the 20 here. Kind of coincided with that green bar low. You want to see it hold this pivot in the 50 moving average, but on the downside, your next major level will be right here around 218 or so. And then obviously on the upside, if you make a higher high, I still think, I don't think it has enough gas to get through this right now. And again, it's kind of consistent with everything across the board here. I just think these levels here that we've been coming into, these May and June sort of levels, there's just too much overhead resistance here right now for the market to push up. Even if we did, push up and kind of gap up on the news, I just don't see it getting through it right now. And then IGV here, same kind of look as the Russell, except yesterday's move was way less exaggerated. It was much less of a gap, but still kind of a shooting star candle and then a gap down today. Still back inside of this range here, but potential little failed breakout there on IGV, so definitely keep note of that. XPI looks a lot like the Russell as well. Gapped above the 200, couldn't hold it, so came back in today. I think this is very top heavy right now as well. I know you put in that nice bull flag. It's a good pattern, but there's, you're stacking that up against a massive weekly bearish consolidation. And, a couple weeks of a bull flag is not going to cut through 2 months of major, 2.5 months of major consolidation there. So, and I've been saying that for a while here, but I do think XBI is getting pretty long in the tooth. Dow Transports, again, a little gap up, tried to break out yesterday, couldn't. A little bit more of a fade here today, and you closed back inside of this red bar yesterday, so you still have a kind of an inside bar here on the daily. We'll see what happens here. Obviously, just like everything else, the CPI will affect that. All right, interest rates. Not much to say here about the 10-year. Again, market just waiting on the Fed up 1.16% here. The yield curve is really inverted though. 2s and 10s especially. It's almost 50 basis points at this point. So not good. And then we have the 30-year here up fractionally. Won't make too much out of that either. Same thing with HYG, just kind of chopping inside of this range. So HYG is holding up okay. And this is actually a little bit better of a pattern here than what I can see like on the spiders here. So you notice how we talked about those higher highs and higher lows there. It's kind of diverging. The HYG is actually a little bit cleaner. So I do like this a little better, at least on the daily time frame. But HYG hanging in there, so nothing really too new to add to that. XHB, home builders, again, that same kind of gap up, shooting star look, and then a sell off today. So I told you guys I do like this as a sell here. I do not like the home builders right now, especially if we have rates start to push up again. That is going to be hugely problematic for these names. ITB, same kind of deal. Pulled back here, but it's still holding up for now on the daily, and then VNQ actually holding up a little bit better. So actually a little bit of follow through here, and it was actually up 54 cents in a down market. So not a terrible little look there for VNQ. I still don't see it getting through that level there, that trend line around $100 at this point. But nice little job of it holding up. XLF here hasn't been able to get through, this kind of area. We stalled out here at that gap, and then yesterday we tried to break out, gap down, came back in, but you were green today in a down market, so XLF is trying to hold up, but it looks to me like there was a lot of trapped bulls by this sell-off here, that CPI sell-off back in June. But overall, XLF's hanging in there, no real problems at the moment. And XBI, pulling back off that 200 moving average, we pierced through it yesterday, basically tested that pivot, and then we got a pullback today, so that is just kind of hanging in there as well. Anyways, crude, again, bit of a nothing burger here. A lot of things, again, today, just really light volume days. August doldrums, not a lot of things moving. The meme stocks moved a little bit here yesterday, and then right back down today, pump and dump, classic pump and dump. But again, most of the sectors flattish to negative or flat to positive. Market's really waiting on that number. XLE did have a nice bit, so this was a strong name in a down market. The energy stocks, XOP also up 1.19, OIH up 1% as well. So energy having a nice little pop here today, but again, the thesis remains the same. It's still looking for a little bit more downside here on crude, and then you should get a good buying opportunity. So be patient with that. Nat gas trying to hold this trend line here, basically coinciding with that 50 moving average. It's trying to get a bounce. Not a really inspiring bounce here today, but if you can get above this red bar and fill that gap, maybe you can make a move here. I don't really have a clear read on nat gas right now, but it is trying to hold that trend line. So we'll definitely respect that for the time being. Dollar index, again, a nothing burger, waiting on CPI. Let's not make too much out of that. It's a tiny range candle. Gold making a higher high. This is interesting. It's actually holding up really well. This next level I'm watching here. So let's just type that in so we get it exact. So it's 1815.30. 1815.20, sorry, let's get that exact. So if you can get a daily chart close above that breakdown bar, that would be very bullish here. I don't think you're ready to do that just yet. You might need to do some more backing and filling, some consolidation, but who knows? The CPI could propel us up here. If we do go up, that's going to be a lot of resistance right between that 100 and 200. So that's right around 1850. On the downside, you're probably going to look around. Well, you got a little pivot there, but then you got the 20 moving average and probably around 1750 if you were to head lower. But nice little pop here for gold today, even in a kind of a quiet market. So nothing terrible there. GDX also, was red, but it finished well off the lows, only down 6 cents. So I like that GDX is holding up as well. Silver also a little bit of a, I like this candle as well. Red, but kind of just an inside narrow body bar inside of a big candle. So little pause. I would like to see some backing and filling, but overall no real problems there on silver. And the miners also same kind of deal, back testing that 50, filling the gap and getting a bounce off that. So the miners are holding up decently as well. Platinum also with a little pause, as was palladium. So again, across the board, majorly a pause day, and the same thing on copper. A little bit of a doji there. Nothing's really changed. All right, so Bitcoin, this is one sector that I noticed was definitely noticeably weaker. So crypto, there's a lot of things down today, but basically just fractionally lower here. This actually just reversed all of yesterday's move. So this was looking like, okay, it's finally going to get a pop here, make a higher high, get off that 20 moving average and break above this pivot. I just can't find anything good right now. You really don't want to see it lose that 20 moving average. Definitely don't want to see it make a lower low here. So if you take out 22,515, I think crypto's in trouble, and Ether, same kind of thing here. So that would be 1560. So any break of those levels is going to be very problematic for the coins. Anyways, here to wrap it up. So again, spiders, you know, just a little kind of inside day from a couple days ago. Nothing really too much to make out of it. Just a pause here. Market waiting on CPI tomorrow. Very light volume. We'll see what we get here. Again, levels on the upside, obviously 420. Again, I think that's kind of your max level here. And then, you know, on the downside, you know, you definitely don't want to see a break of these pivots here or of that gap. If you do, probably headed down to that 400 handle. Anyways, guys, going to wrap up here. You guys take care. Come find me on carnivoretrades.com, and I'll talk to you all tomorrow.